The liquidity game, how global money supply and strategic Bitcoin reserves could trigger the next bull run. Introduction. Bitcoin's recent volatility has left traders and investors both intrigued and anxious. In the span of just 9 days, Bitcoin plunged to sub 80K on February 27, 2025, and rebounded to 93K by March 5th, highlighting the intense liquidity dynamics at play. This roller coaster reflects a larger underlying force: global liquidity conditions and strategic shifts in Bitcoin adoption. This exposition explores the convergence of two powerful drivers: global liquidity expansion and potential strategic Bitcoin reserve announcements by U.S. states and the White House. By examining these factors, we can uncover how a synchronized wave of liquidity and geopolitical moves could trigger the next major Bitcoin bull run. The role of global liquidity in Bitcoin's price movements. The M2 money supply as a leading indicator. Global liquidity, as measured by M2 money supply, has proven to be a leading indicator for Bitcoin's price movements, with a predictive offset ranging between 45 to 70 days. This offset accounts for the time it takes for liquidity injections to flow into markets and impact asset prices. Historical patterns reveal that when M2 expands, Bitcoin often follows suit, reflecting its role as a hedge against monetary inflation. China's $138 billion stimulus. China's recent announcement of a $138 billion stimulus package to boost technology sectors signals a significant injection of liquidity into the global system. This move could amplify the M2 expansion and support Bitcoin's upward trajectory, especially as investors seek hard assets to counter inflationary pressures. While Japan's tightening might seem contradictory, the scale of China's stimulus, combined with potential U.S. liquidity actions, could outweigh this effect. The Strategic Bitcoin Reserve Catalyst. The White House Crypto Summit, March 7th. All eyes are on the White House Crypto Summit set for March 7, 2025, where speculation is mounting around a potential strategic Bitcoin reserve announcement. Such a move would fundamentally shift Bitcoin's status on the geopolitical stage, potentially triggering a game theory scenario where other nation-states rush to adopt Bitcoin as a reserve asset to avoid being left behind. State-level Bitcoin reserves. Texas has already passed a bill to establish a state-controlled Bitcoin reserve, setting a precedent for other states. With over 30 U.S. states considering pro-Bitcoin legislation, a domino effect seems plausible. If a few states confirm Bitcoin reserves, it could force others to follow suit rapidly, increasing demand and reducing circulating supply. This content is brought to you by Bobby Giggs. Promote your brand here and reach a wide audience across platforms like YouTube, Instagram, and Facebook. Follow the links in the description to get started. 4. Game theory in action, the strategic reserve effect. Bitcoin as a hard asset hedge. As central banks expand liquidity, Bitcoin's appeal as a hard asset hedge against monetary inflation strengthens. Strategic reserve announcements would institutionalize Bitcoin's role as a hedge, potentially attracting sovereign wealth funds and institutional investors seeking to preserve capital in an inflationary environment. Global competition for Bitcoin. If the U.S. or its states begin accumulating Bitcoin as a strategic reserve, it could ignite a competitive rush among other countries to do the same. This competitive adoption would not only drive prices higher, but could also drastically impact the available supply on exchanges, making it harder for latecomers to secure significant positions. Challenges and risks, the flush-out factor. Potential for one more shakeout. Despite the bullish outlook, the risk of another significant flush-out cannot be ignored. Market makers could exploit leveraged positions, triggering a final shakeout before liquidity conditions drive prices higher. Such an event could serve as a springboard for a more sustainable rally. Influencer narratives versus liquidity reality. Influencer narratives have often misled retail investors by focusing on risk-on, risk-off dynamics without accounting for the underlying liquidity conditions. As liquidity emerges as the true leading indicator, the focus must shift from influencer-driven sentiment to real-time tracking of M2 expansions and strategic reserve announcements. Conclusion. In conclusion, the combination of expanding global liquidity and the potential for strategic Bitcoin reserve announcements creates a powerful setup for the next major bull run. Key dates to watch are March 7th for potential White House announcements and late March to early April for the impact of liquidity expansions based on the 45 to 70-day offset. The real game changer will be the ability to track liquidity conditions in real time, providing traders and investors with the tools to navigate the coming waves effectively. As Bitcoin's role as a strategic and hard asset solidifies, the stage is set for a move well beyond 104K.